Welcome back, everyone. This is a brief update on the oil market. During the past week, oil prices continued to rise and WTI reached over $27 per barrel, only to correct slightly lower yesterday. Some of the major weekly oil data from the US released in the previous days indicated oil production is still ongoing, yet at lower levels than previously seen. EIA yesterday released a figure of plus 4.6 million barrels, which is almost half the previous reading and much lower than the forecasted one. The API weekly reading also released a figure lower than the previous one, coming in at plus 8.4 million. The US Baker Hughes oil rig count fell from 378 to 325 active oil rigs in the previous week. Please note all these readings confirm oil production is lower compared to the previous weeks, and the news tends to support oil prices. On a separate note, news from the OPEC Plus group implies that some members of the group are currently having a difficult time with their production activities. Keeping in mind that the group has agreed to cut oil production and support oil prices back in April, the action to implement that decision may not be so simple. Saudi Arabia and Russia may not have a problem on cutting production, as they are already among the superpowers of the industry and may be able to survive the current adverse circumstances around the world. Their oil exports and production can be reduced as they have the economic and political power to influence the oil market substantially. However, referring to smaller oil countries like in the case of Iraq, this may not be the case. Reports have surfaced that Iraq is currently struggling to solve issues on various fronts and at the same time keep its own business moving forward. On the one hand, Iraq is obligated to follow on the OPEC Plus agreement and reduce its production levels, as the group has decided. On the other hand, global oil giants like BP, ExxonMobil, Lukoil, which operate and produce in Iraq, may not be willing to follow up on the cuts. Oil companies are very important, and countries like Iraq need them as their economy heavily depends on oil activities. Yet, if the production cuts are not fulfilled as planned, OPEC's plans to control production may not be realized. Production cap compliance is key at the moment, as prices are already low and demand is also decreased compared to last year. Yet, it is said that Iraq is still in search of a solution to compromise on all fronts. Furthermore, and on a separate note, Russia seems to be on its way to reach its target of decreased oil production levels. Russia's oil production in May dropped to 8.75 million barrels per day, a figure rather close to its target of 8.5 million barrels per day for May and for June. According to Russian energy officials, oil demand had dropped nearby 30% in April, causing prices to collapse. However, oil demand has started picking up around the world as lockdown measures are starting to ease. There is also a general sentiment that the worst circumstances as a result of the virus outbreak are already behind us, which provides optimism on various fronts of the global economy, including the oil market. As a conclusion, China's trade data released today in the Asian session may have lifted oil prices higher in the European session. The data indicated Chinese exports rose unexpectedly instead of contracting. China's demand for oil is set to increase further as its economy moves into a normal pace, and the news tends to support oil prices and the market in general. That's our fundamental news. Please stay tuned for our technical analysis. Welcome back, everyone. This is our technical analysis. This is WTI 4-hour chart. Now, WTI moved higher in today's European morning session. And if the momentum is to continue, then our R1 28.20 level could be approached and tested. Please note this price has not been seen since the 14th of April. Now, levels higher than the R1, in our opinion, are the R2 31 resistance level and the R3 33.75 hurdle. However, leaving room for a selling scenario to prevail, we could also see the S1 25.30 being reapproached. Other levels we have noted even lower are the S2 22.35 level and the S3 18.20 line, which were last seen on the 4th of May and the 30th of April correspondingly. Finally, the RSI indicator below our chart is running on the 70 level, displaying the bullish reaction seen so far today on oil prices. Thank you very much for your time and enjoy solid trading.